Good morning, everyone. Good morning. Hope you guys are doing well. Today is Friday, July the 17th. Overall markets, as you can see, the Qs gravitated towards the bottom of the range yesterday. And now in the pre-market, we're down roughly 1.75%. Yes, down about 0.8% here in the pre-market. So overall indices themselves, specifically the memory names, you can see SMH, a lot of the semis have been a lot weaker as of recent. We had TSM earnings, which was solid, and we had a drop yesterday, and we had some continuation lower. So you can see overall markets are finally now breaking outside of this range that we have on the higher time frames, but actually towards the downside here on the Qs. We'll talk about this a little bit more in a second and what to expect moving forward here. With that being said, what's up, everyone? Good morning. Hope you guys are doing well. Let me pull up the economic calendar and we will get started. Before we do that, what's up, everyone? Good morning. Good morning, B Roots. Good morning, J-Tan, Kelvin, Andy, Maria, Cody, Gerald, Martin, Concise. Good morning, Beeson. What's up, everyone? Juan, Senna, Robert. What's up, Julius, Jose? What's up, Andrea? News at 8:30 or news at 5:30. What are you expecting? At least for today, we do have consumer sentiment that's going to be at 10 a.m. Eastern Standard. The main things that we had this week was PPI along with CPI. Yeah, what's up, everyone? Good morning. Hope you guys are doing well. Let's go on to the economic calendar here. Let's kind of talk about what happened in the overnight session as well. So far, as you can see, we are gapping down here in the major indices. The Qs, we have the top of the range, we have the bottom of the range, and now you can see we're actually breaking underneath it here in the pre-market. If you look at the SPY, or if we go into the ES, technically we're still inside of this range here on the ES, but you can see rejected off the top of the range and now we're heading lower. For the NQ, we have this range established and now you can see we broke underneath it here in the pre-market and now we're gravitating towards the downside. So if we go back onto the economic calendar, really for the news events that we had in this overall sell-off here in the markets, just has to do primarily with just being the overall markets being weak, right? You can see we've been consolidating for the past, I'd say a month or so on the major indices, or roughly a month. You can see all the way from the 22nd of June to now we're all the way midweek, or sorry, mid-month in July, and we were roughly just kind of consolidating in this general area. So semis stayed weak, and now we finally have that break towards the downside. You can see some of the semis are also breaking underneath this range here as well. So the SMH break underneath this 570, and now we're back down into that 550. So overall semis, basically as soon as we had that MU earnings, the sell-off kind of started on the memory names, and then of course the semis, and there's kind of a domino effect, more so in the markets, and now you can see a lot of other things are pulling back as well. So for the news events, at least coming into market open here today, we do have the prelim consumer sentiment that is going to be at 10 a.m. Eastern Standard Time, along with the inflation expectations. This is sometimes a red folder news event. As of late, right, they kind of change this to an orange folder news, but it's still something to keep in mind as well. So that's going to be at 10 a.m. Eastern Standard. With the overall markets having these big moves in the overnight session, generally speaking, whenever we do have any red folder news events with these big gap downs, we usually don't have as big of moves or as big impact in the market, since in this case, we're down about 3.4% on the SMH, the Qs down 1.7%. That's a pretty big gap down in the markets, specifically for the QQQ. The SPY is only down 0.8%, but this one very much well could drop and we can see a bigger retracement towards the downside. So for the SPY, all right, let's go into the higher time frames now, starting off with the major indices, and then we'll go on to some of the tech names that we have. Just going to grab some water very quickly, and then we'll get started. Okay, let's take a look at this on the higher time frames. Let's first talk about the QQQ. and we'll talk about this on the daily chart. So as you can see here on the daily time frame, the levels that we actually have marked out on the Qs was this kind of wedge pattern that we're forming. You can see a lot of consolidation within the past, right, 20 sessions in the market. You can see the levels that we have marked out was this right here, 710 to our 730. And now you can see we're actually breaking underneath this range here, coming back down into this 690. This is the original bounce level that we had from earlier in June. You can see once we had that initial pullback, we end up having buyers stepped in and we end up pushing back up in towards the upside, very close to that all-time highs area. And now you can see we're consolidating and we're going to come back down once again. So moving forward here now for the Qs, we're still going to have this level marked out. And this is going to be key. If we break underneath now and start holding underneath that 700, we could see a bigger retracement. We have a couple daily gaps to look for. We also have, right, a bunch of, there's really not that much support, right, underneath this 700, right? If we're to look at this on the higher time frames, if we're to just mark this out, if we break underneath that 700, not really a good sign for the overall market, since the next level support is actually technically all the way back down in towards that 650. Not saying the market's going to gravitate down there, but if we break underneath the next logical level, 680, and then we have a couple of gaps towards the downside here in the markets. What I would like to see here is the reaction. We very much well could just come back down once again and look for a potential kind of double bottom here on the daily time frame, and we reverse back towards the upside. That's probably the more likely scenario here on the Qs. We'll talk about this a little bit more on the weekly recap. But as you can see here for the Qs, right, just mark out this consolidation. So far, we are still consolidating. If we break underneath with the candle close, that would signify a lot more weakness in the markets if we have a candle close underneath this range. And we could see a bigger pullback, as I mentioned, next level support all the way back down in towards 620, which is very far away, right? You can see a lot of these high beta names with the Qs just consolidating here. A lot of these high beta names are down 30-40%. Marvel, you have MU now pulling back, INTC pulling back off the highs, right? The Qs is not even down. The Qs is roughly down, right, 10%, or maybe a little bit less, right, off from the highs. Or sorry, it's only down 7% off from the highs. So down 7% on the Qs. You have some high beta names down over 30-40%. And the SPY, as you can see, is only down a few percent off all-time highs. And some of your high beta names are down, right, 30-40% as I mentioned. So the SPY and Qs in itself is still very much strong and holding up compared to the rest of the names. And of course, the semiconductors are a little bit weaker now here as well, right? Semis in this case are down roughly 20% off the high. So that's why we're having a lot of bigger pullbacks, of course, on the semiconductors and some memory names. So if you look at the Qs, right, that's kind of like a rough outlook on the weekly time frame. If we look at this from an hourly perspective, we'll talk about more on the higher time frames on the weekend. But if we talk about the Qs now on the lower time frames, key levels that we have marked down in the hourly is going to be the 704, at least for today. And we can also mark out our low that we created here. And then we can also mark out some of our pre-market levels here. Let's actually just do this, get rid of this. So the key levels coming to today here for the QQQ, we can mark this out. We can also mark out that kind of pre-market high area. I'm actually going to mark out that pre-market high area instead. Since we are farther away from our previous day highs, we're going to have to use our pre-market range. In this case, 704 is our previous day lows. We have our pre-market high and our pre-market low, which is our 696 along with our 690. If we do want to see some upside in the markets, potential mean reversion, would have to break above our pre-market highs at a minimum for this potential mean reversion back up in towards that 702. There is a good chance for today, right? Usually Fridays, the markets don't bottom, right? Any sort of pop that we have is just going to fade towards the downside. It might just start trending the rest of the day lower. So for the Qs, underneath our 690, we can see a move next level on the higher time frames. Let's go back onto the daily chart, is all the way back down in towards this, which is our 685, a lot farther away. But those are the key levels that we have on the higher time frames. We can also mark out that 692 as well. So for the Qs, key levels that we have marked out towards the downside, 692, along with our 690, along with that 685 towards the downside. If you look at the QQQ here, fairly similar thesis. What we have is the range that we have created. Now we're breaking outside of this range here on the higher time frames. We just want to see continuation towards the downside now after breaking outside this range. So any single pop that we have, we really want to see this be shorted for continuation lower. It's going to be hard to flip bullish intraday unless we get a minimum above our pre-market highs. And now I'd like to see at least the reclaim back above this 29,200. But now I have more of a bearish stance in the markets. We are about to come down into this level of support on the higher time frames, which happens to be our 28,600, which you can see we have a little bit of reaction here in the pre-market. So for the NQ today, key levels that we're going to have marked out are pre-market lows. If we get underneath that pre-market lows, we can see continuation towards the downside underneath this 28,500. If we get back above, we can see this push back up in towards that 28,800 here on 28,800 here on the NQ. Let's go into the SPY chart here. Key levels that we have marked out is on the hourly time frame is going to be back down in towards that 740. So the key levels that we have marked out here on the higher time frames, let's just get rid of this, is our 756 along with our 740 here on the higher time frames. So key levels that we have marked out is going to be that 746. Multiple touches here. Now we're gapping underneath. If we maintain underneath this level, we can see a push down in towards that 740 here on the higher time frames. So right here, touch here, touch here, touch here, down in towards that 740 for SPY. If we look at the ES, key levels that we have marked out is going to be that 7480. You can see touch here, and then the next key level is all the way back down in towards that 7480 here on the higher time frames. Let's take a look at the SMH. SMH recently broke outside of this range. Key levels that we have marked out, ranging. If we break underneath that 570, we can see continuation lower, which we're currently doing. If we look at this on the daily chart here as well, definitely showing a lot more weakness in the markets. If you look at this and you pull up some of the EMAs, now flipping underneath the 9 and 21, we are trying to break currently underneath this key level as well, underneath this 580. So really no support. We're kind of breaking underneath a key technical level here on the SMH. So key levels that we have marked out is going to be that previous day lows. We can also now mark out our pre-market levels here as well. For the SMH, underneath our pre-market lows, continuation lower, potential pop and fade. We can see some continuation towards the downside here as well. And then even the IWM. IWM is actually still holding up compared to the overall markets. Nice consolidation here. We would like to see some buyers kind of step in above that 290 for a pushback towards the upside here. So that's what we have for the major indices today. Of course, we are gapping down, so we're going to have bearish buys coming to market open, also breaking outside of this range here as well, at least to start off the day. If we want to see any sort of flip back towards the upside, we need to see a minimum break above the pre-market highs. Okay. With that being said, I'm going to head on to some tech names now here. If you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. All right, let's go on to the higher time frames as of recent as well. So you can see the overall market's pulling back. Key levels that we have on the higher time frames. So a lot of you guys, I see someone in the comments as well, especially if you got into some of these high beta names, right? This is expected why the market is going to pull back, right? You can see the Qs is only down roughly, let's mark this out, 7% on the higher time frames. Your high beta name, let's take a look at something like MU. Off the highs, this one's down 30%. If you take a look at SNDK, this one's down roughly 40%. Like any other ticker like WDC, INTC, these ones off the highs are down roughly like 40% after having a big move. So if you're to just draw your Fibonacci's from this swing low to this swing high, right, this is essentially, right, the areas where you want to be looking for opportunity, right? You don't want to be looking for opportunity as the markets are rising, right? That's what will happen a lot. Something like a MRVL, right? Whenever we had this original bounce from March all the way to June, right, we basically had a run up roughly 300%. So if we're running 300% and now we have a 50% retracement, or now we're dropping a little bit more, in this case, a 40% retracement, right? These are the areas where now a lot of these stocks are on some discounts, right? If you're interested in buying up here, now as it's pulling back, right, all of a sudden a lot of people aren't looking to buy here, right? Why would you look to buy here if you're not looking to buy a pullback here now? So a good area after a big push up, you can just draw your Fibonacci's. What you have is a 50% retracement down to the 61.8. That's a good golden pocket. You want to buy it on the strongest names. So names like MU, right? INTC, SNDK, names that had a nice push higher, or even all the high beta names, right? Names that you want to buy on pullbacks are names that are the strongest. You can see the VIX in itself is actually not even up that much as well, right? The VIX is only at 18. A good rule of thumb is whenever the VIX spikes, right, you want to be looking to add. When do you want to add? Most likely when it's at 20, right? A good rule of thumb for me is when I'm going to deploy capital is when the VIX is, of course, above 30, you can deploy 80%, right? 80% of your capital. Right. The one thing about trading these high beta names is you're not going to try and find the bottom, right? You can buy these high beta names and they're going to keep dropping now because they're in a downtrend. And especially the SPY and Qs, if it drops another 10%, what do you think your high beta name is going to do? It's going to drop another, right, 10, 20%, right? That's just how it works. So if you the SPY right now actually is at a right at a key level of support. If the SPY bounces and pushes back towards all-time highs, your high beta name is actually probably not going to bounce as much just because it's lagging behind the overall market. So you can look to slowly average in, but don't expect to try and time a bottom, right? Before the names were in a clear uptrend. Right now, with it breaking market structure, right, you can see once you reclaim back above the 9, you just kind of ride the momentum towards the upside. But now we're clearly underneath the EMAs, right? What's a likelihood chance of now MU all of a sudden bouncing at 800 and having a V-shaped recovery back up and towards the all-time highs? Very unlikely. If it was to head back towards all-time highs, right, it would now start to find a bottom. You look to maybe start building up a higher low and then start moving back towards the upside, right? Whereas before you would have a nice V-shaped recovery because the overall market sentiment was bullish and it was holding EMAs. And at this time, what was key as well was that the markets were also gravitating towards the upside. Now we're consolidating. We want to be a little bit more. We want to be a little bit more patient. So the VIX, right, is only at 18, right? Whenever the VIX is at like 15, 16, right, there's not that much fear in the markets. Obviously, we have a bigger pullback on a lot of the semiconductors, but if you're looking at the SPY index itself, right, the SPY is not even at all-time highs, right? There's no reason to panic. The SPY is only down 2%, right? We're basically at all-time highs here on the SPY, but of course, your tech name or your semiconductor is definitely a lot weaker since the SMH is down 18%. But that's just because, right, the SMH from the April bottom was up over 86% on the actual indices themselves. SPY was only up 20%. So it's all relative speaking, right? That's why some of the semis are down right now. But if you are bullish long term on some of the semis, there's going to be great buying opportunities coming up. 50% retracements down into that 61.8. Those are great buying areas, right? You can see some of the tech names like even AMD. This one very minimal pullback. It's only down 20%, but relatively speaking, from the April bottom, right, it's up 200%. So AMD could pull back even 50% or down in towards this daily gap, and we'd still be bullish, right, long term wise. Obviously, the structure would break, but long term, right, AMD would still be very bullish, even if it pulled back 30, 40% after moving over 200% on the actual underlying itself, right? If you're bullish long term, right, you're not going to look at every single intraday price movement because you're looking for a long-term perspective. If you're swing trading, right, or you're short-term trading, then that's something completely different. So with that being said, let's head on to some tech names that we have here as well. Yeah, we're talking about the actual underlying stock. If you're talking about options in this case, right, we're in a daily downtrend. You can be open and playing both sides. You're not holding on to a position for a very long time. All right. With that being said, I talked about the VIX quite a bit. But a good rule of thumb for the VIX, one of the best rules of thumb is just the volatility index. You don't even have to look at the chart in itself to understand. Whenever the VIX spikes, that's when you want to be adding. Right? If the VIX spikes about 20, that's a good add. Maybe deploy like 50%. But when the VIX spikes to 30, that's when you want to load the boat. Right now, the VIX is not even at 20. So there's not that much fear in the market. Right? Of course, there's a lot more fear in the semis. But there is going to be plenty of buying opportunities here soon. If you're interested in some of the semiconductors, right, you're not gonna don't try and time a bottom. You're gonna more so be looking to have like a starter position, then slowly add, and then wait for it to start basing before you add more. Okay. With that being said, let's take a look at Tesla here. Key levels that we have on Tesla, we're actually breaking outside of this range. Overall market starting to drop here as well. I'm not sure what all this is about, but for Tesla, let's go on to, yeah, I have a lot of drawings here for some reason. But for Tesla, key levels that we have marked out is our 390. This is the level that we have marked out yesterday. Let's get rid of the EMAs here as well. So for Tesla, this is breaking underneath the key technical level. I wanted to see continuation towards the downside underneath this 390. Now you can see we actually end up having a weak candle close, and we're also gapping down here now as well. So for Tesla, key levels that we have marked out 390. And now let's see if we can get some continuation towards the downside. Going to the hourly time frame, or sorry, going to the lower time frames here on Tesla, key levels that we have marked out is going to be that previous day lows as well. What we like to see is maintain underneath that previous day lows, hold for that push down in towards our 380 here on the higher time frame. So let's mark out that previous day lows. For today, let's keep an eye on that previous day low retest for continuation lower. AMD, this one finally broke outside of this range here on the higher time frames, the key levels that I have marked out. Let me just refine some of the levels. For AMD, the levels that we have marked out was our 560 to our 500. So we're unable to break above. And now you can see we're starting to gravitate down in towards the bottom of the range. A little bit of buyer stepped in on AMD yesterday, but ultimately now gapping underneath our 500. AMD, we can be looking for some downside today. Overall market starting to flip here as well for a potential retest off this previous day lows general area, along with our 500 for continuation lower. Level of support turn into resistance. And now we want to see continuation lower. So let's keep an eye out on AMD. Next major levels is all the way down in towards our 440. And we can also, we can refine this level just to make it nice and easy. Previous day lows plus the higher time frame key level here as well. You can see a little bit of rejection in the pre-market. Let's keep an eye on that pop and fade. That's going to be the game plan for today for a push towards the downside. Nvidia, this one is now pulling back, of course, with the broader market as well. We're actually coming back into the area that we broke out from, 200. This is our breakout level. You can see break, retest, continuation. Now we're coming back down. For Nvidia, we could see a potential buyer step in once again, but going to be a little bit more difficult. Of course, we have this daily gap back up and towards that 206. Not really interested in shorting Nvidia, to be honest, but underneath that 200, we could see a flip here on the overall market. So underneath that 200, back below this previous level of support, turn back into resistance, we can see continuation lower. Apple is a name that's been holding up very nicely compared to the overall indices themselves. We've breaking out. You can see Apple, one of the strongest names. If Apple pulls back, we can definitely see a bigger pullback here on the indices. If Nvidia has a little bit of a bigger pullback, we can definitely see the market starting to flip here as well. But Apple's at all-time highs. One of the names that's been holding up the markets, break above that 320, nice continuation. Another day where we have a strong push towards the upside here as well. Key levels that we have marked out on Apple is going to be that previous day highs area. Key levels that we have marked out is going to be that 340. Other levels that we have marked out as well is going to be that 328. So we have our previous day highs marked out. We have our previous day lows. Similar thing. Apple above our previous day highs, continuation towards the upside. Above its previous day highs, hold, continuation. Above your previous day highs, hold, continuation. Google was fairly bullish, came up into that key technical area, but pretty strong rejections here off that 370. So for Google, this was a key technical area. You can see the area that we broke down from, retest towards the downside, another push up in towards that 370. And look at this big candle yesterday. Yeah, look at this big candle here yesterday on Google, and now we rejected off that 370 once again, and now we're back at that 350. So pretty big move towards the downside on Google, rejecting off that higher time frame level of resistance, and now we're coming right back down in towards the bottom of the range, which is that 350. So for Google, this one definitely a lot weaker. You can see we had some news yesterday close to the end of day, which ended up dropping the overall name as well back towards the downside. But for Google, higher time frame still intact, but definitely a lot weaker now. It might take a little bit longer to base here, of course, with the overall indices pulling back themselves. Just understand if the overall indices pulling back, then of course your individual name is going to pull back as well. Very rarely will you have an occurrence like something like Apple, where the overall market's very weak and then Apple showing some relative strength, and this one's just continuing higher. As for Microsoft, this one actually hit my key technical area. Keep an eye on a Microsoft potential rejection offer 400 level support now potentially now turning into resistance for a push right back towards the downside. If you go into the lower time frames, key levels that we have marked out is this 400 general area. So now we are kind of right at this 400. You can see nice, pretty strong candle close, but now we're gapping back underneath. As for Microsoft, you just want to keep an eye out on this one on the daily. We're still actually technically now building up higher lows here on the daily time frame, but you want to be cautious. We could see a weekly rejection, and rejection kind of right off this general area of 400. All right, if you look at Meta, this one is gravitating towards the top of the range, which is our 680, a little bit of rejections. Now we have this daily gap back towards the downside here. As for Meta, we want to be a little bit more patient. Key levels that we have marked out is our 660s. This is the area that we ended up holding. Now we're getting back underneath the 660, and the key levels is all the way back down in towards that 650 here on the higher time frames. As for Amazon, key levels that we have marked out is our 660s, or sorry, 260s. As you can see yesterday, this is our previous retest level. So a lot of names actually came up and rejected right off our key technical level. This is our support, resistance, and pretty big seller stepped in. So for Amazon, definitely want to be a little bit more patient here now, rejecting off our 660 key technical area. Now we are back also underneath our area that we broke up from, 250 here on Amazon. All right, let's go over to a couple more names. It seems like we're kind of running out of some time here as well. We had Netflix earnings in the after hours, so key technical level that we have marked out is our 76. We talked about this being a key level. Earnings obviously is the major factor here. But if we could reject off this level, we can see some downside. If we got above it, potential flip. But of course, earnings was the key, right? Earnings, rejection, continuation lower. As for Netflix here now, next levels, we're now kind of breaking underneath this key level support as well. And we're overshooting this level. Next levels towards the downside on Netflix. We can mark a couple lows here. 66, we have our 60 key psychological level, and we have some more room towards the downside. So for Netflix, Not interested in playing this one today for day one after earnings, but for Netflix, just want to mark out up close candles, pop and fade for, of course, continuation towards the downside. And then SpaceX, every single day, yeah, rejection here on SpaceX, continue to drop lower, key level previous day lows. Now, of course, we had some news in the after hours as well. And now this one is definitely a lot weaker. All right, with that being said, gonna go over a couple more tickers. Yeah, running a little bit out of time here. So we'll kind of speed run through some tickers and then I will call it a day. Let's see, there's some questions. I'm guessing there's a really big support zones they have drawn out are down on the 1 hour, 1 hour daily instead of 15-minute. Exactly. Sometimes you'll see they're so big, they're more so on the daily time frame. I just want to say, whoever's not in the Discord server that are watching this, you're missing out. Jack and Tony are probably the best mentors in the game. Appreciate that, Kenny. Jack, if the weekly time frame is bearish on the name, but it just broke out of the 21 EMA on the daily, would you still be trading the bullish setup intraday? Intraday setups, you're not really going to use that much. So something like, let's say for Apple, or let's say you're trading Google. If you're trading an intraday setup, the higher time frame, the weekly time frame is not going to matter as much. The weekly time frame is going to matter a lot more for like longer term uh, swing trades or maybe longer term day trades. Right? You're not really going to be using the weekly time frame. It's not going to play as an important factor if you're trading on the 1 minute time frame and you're scalping it to high of day. Right? It's more so based off of intraday price action. So when you're on the 1 minute time frame, you can be like 2 time frames away. Right, the 15-minute time frame and the hourly time frame is going to be your go-to. If you're day trading, right, or sorry, if you're swing trading, then you can use the daily and weekly because your entry is going to be on the hourly. But if you're on the daily chart, you have to go down to the hourly, 15-minute, 5 minute, right, 1 minute. By the time you're on the 1 minute time frame, now you're going to be confused on what trades to take. Just be on the 15-minute and hourly time frame if you're just day trading. Okay, let's quickly go into a lot of these names here. You can see basically everything's dropping. AVGO, any name that was stronger earlier. Palantir was somewhat holding up. MU dropping. SNDK, INTC. A lot of these names are now dropping towards the downside. SK Hynix, MBIS, MRVL. A lot of these names are for sure pushing lower here. There's not too many names that are actually holding up. So at least for today, we're just going to mark out those previous day lows. Previous day lows is going to be key on basically all these semiconductors, right? Something like an MU, INTC, SNDK, mark out that previous day lows and look for a hold underneath. If we maintain underneath that previous day lows, just look for continuation towards the downside. All right. As for the game plan for today, the QQQ, key levels that we have marked out is just going to be our pre-market range. We are looking for continuation lower, potential pop and fade. We're just going to maintain a bearish bias here in the markets. Top watches for today, AMD underneath that 490 for continuation lower. That's going to be one of my main watches towards the downside. At least for everything else, it's more so based off of intraday price action. So, sorry, a lot of these setups look fairly similar. But we're just going to be looking for continuation. We're going to base it off of intraday price action as well. The game plan this week has been just waiting for the first kind of 10 to 15 minutes to play out. And then after that, we're going to see whatever name has relative strength or weakness and look for continuation on those names. So a lot of these ones just mark out the key technical levels. And then we're going to be looking for the reaction here off 490. If we reject, then we'll look for continuation. If we flip back above, then potentially we can look for some sort of long thesis for a mini scalp back towards the upside. But yeah, with that being said, that is going to be it for me today. I'll have a full market update for you guys hopefully tomorrow on my second channel, talking about what to expect moving forward. Of course, with the markets dropping here, what is the game plan moving forward for specifically some of the semiconductors and some other tickers as well. But yeah, with that being said, it is a Friday today here. I do expect a decent amount of volatility just because we're gapping down here on a Friday. The markets don't normally bottom on a Friday. So if the markets keep dropping, sorry, if the markets do keep dropping today, don't try and time a bottom, right? Usually the markets will just continue lower for a Friday. And then by the time Monday comes, right, it'll start bottoming it on Monday, or if there's any sort of news event that we do have. But at least for today, be a little bit more cautious on the long side unless we see strong buyers reclaiming at a minimum back above that pre-market high. And yeah, with that being said, gonna call it a day here. Hopefully, you guys have a great rest of the day. Hopefully, you guys have a great weekend, and I will see you guys all tomorrow. Or sorry, all on Monday. Take care, everyone. Peace.